Welcome to another episode of Coffee and Charts. In this episode today, we're going to be going over why I think Bitcoin is not going to reach above $100,000 just yet. I'm going to go over the macro, fundamental, and technical analysis. We're going to go over all of the data that you need to understand as to why $100,000 Bitcoin or getting above that is going to take a little bit longer than expected. So without further ado, let's jump into the charts. All right, so let's jump into the Bitcoin chart as always. And if you guys missed last episode, then I'm going to go through these boxes here. So we always start with the zoom out on the weekly. Weekly candle close this week on Monday was a little bit of indecision. So we had prices start to go down on the Monday. We re-tapped the 100-week moving average. So you can see here that we've tapped this now for 3 consecutive weeks. So this is giving a really good indication of some good support here around the $84,000 range. The $84,000 range, surprise, surprise, is the cost basis for institutions. So this is an institutional market now. It's not driven by retail. So it makes total sense that we see huge support around the cost basis for institutions. So we had the Monday dump, and then we had the bulls come and take that back up later on in the week. And the bears actually starting to come back in over the weekend. So we actually closed the week off slightly in the green, but showing a little bit of indecision here. We do have, of course, the Federal Reserve interest rate decision tomorrow on the 10th of December. We're probably going to get more of a direction of where we're going to go in the markets this week based on the interest rate cut, which is looking around 0.25 basis points. That's at about a 90% conviction now that we're going to get that. So that'll be really interesting. It's going to be volatile throughout the rest of the week. So just so you guys know, the main thing that we like to see here is we are seeing higher highs and higher lows being printed. So this is really good to see. We're slowly crabbing towards this downward trending line, which started basically at the start of the liquidation event that happened on the 10th of October. And we have been continuously printing higher highs and higher lows here. So we essentially want to get up to this area, which is around $94,000, just to see if we're going to retest and come back down to 84,000, or whether we're going to break through to the upside. Okay. Now the breakthrough to the upside is going to depend on a lot of different things. Number one, Fed rate decision. Are we going to get that basis point cut? That is relatively bullish. But the other looming big, massive black cloud is the Bank of Japan interest rate decision, which is the 18th of December. So mark that on your calendars, because that is a massive, massive, massive macro decision that is going to affect the global economy. Because if you guys don't know, the yen carry trade is currently unraveling. There's a bunch of yields that are going extremely high at the moment. So you can see here the 40-year is going up massively at the moment. It is ranging around that 3.6 to 3.7%. If it gets up to 4%, that's a problem. The 10-year, once again, is at 1.961%. If we get up to 2%, that's also a big problem. So is this going to cause a liquidity crisis? That's kind of the big looming black cloud at the moment in the markets. That's something that we need to look at. So the 18th of December, if interest rates are going to get hiked on the Bank of Japan, or by the Bank of Japan, sorry, then that's going to cause some issues because it just means that, it's not cheap to borrow anymore. People are going to have to sell off assets to be able to pay back the loans at higher rates. And that's why the yields are going up as well. So we need to see that start to taper down massively. So that's something huge. And that's one of the main reasons as to why I do think Bitcoin's going to struggle to get above 100K until we have the yen carry trade start to subside, yields come down. And once we get the Fed interest rate decision out of the way, and also the Bank of Japan interest rate decision out of the way. So once we have more clarity on that, then that's going to really determine the direction of the market in the short to medium term. So that's kind of the main things that we're looking at the moment. And one of the big things that we're also looking at is, again, this is an institutional based market. Are institutions buying Bitcoin right now? Are they selling? At the moment, they are outflowing a lot of Ethereum right now, but Bitcoin's actually staying pretty steady. So we're getting, decent inflows. And like I said, $84,000 is the cost basis for institutions. So this is a really key area. So we've got to be mindful of everyone looking at TA and giving certain barriers of supports and resistance. I haven't seen anyone mention the cost basis of institutions being $84,000. Pretty sure I'm the only one talking about this right now. So that's super interesting and something that you guys need to be aware of. This is a 18-page document that we've put together on the macro side. So this is completely free to access. The link for this is going to be in the description down below. It talks about all kinds of stuff to do with macro liquidity. The fact that, for example, you've got quantitative tightening that has just stopped on the 1st of December. That was removing around $95 billion per month. That now stops. And we're starting to go into what we call quantitative easing. So that's going to start around Q1 of 2026. So it's not happening straight away. And that's also why it's another reason as to why I don't think Bitcoin's going to get above 100K for a little while. We're going to have what we call soft QE. So it's essentially QE without saying it's QE. So just to give some comparisons here, when QE does start, the balance sheet is expected to increase by $20 billion per month. That is a huge difference to $800 billion per month that we were getting in 2020. So the reason why we had altcoin season and why we had huge price appreciation in 2020, 2021 is because you got to remember, during COVID, everyone was locked down. They couldn't spend any money. They were given free stimulus checks. Those stimulus checks ended up going into the markets, of which a lot of that went into Bitcoin. The reason for Bitcoin going up so much is Bitcoin is intrinsically linked with liquidity. So much so that statistically, Bitcoin is linked with liquidity 83% of the time. That's why it tracks and tends to track the M2 money supply. So I know that a lot of people have talked about the M2 money supply. It does track it quite well. It has been tracking it relatively well over the last year or so. It is slightly off right now, but again, you've got to understand that 83% of the time means it's not going to track it to an exact T. But if we have a look at global liquidity now, and we move this by 108 days, which is typically around the time that it takes to get into Bitcoin, you can see it's pretty accurate in terms of where it's going. This is the discrepancy here. And also you've got to understand that this whole liquidation event was crypto specific. So as the actual economy itself, the S&P 500 stocks have started to go up and is tracking M2 a lot better, Bitcoin and crypto have been affected by the liquidation event, which is taking a lot of money out of the markets. So that has an effect in itself. But in general, you can see here that the M2 money supply is still going up. It's kind of tapering down a little bit now. But that's something to keep an eye on and to still track. So yeah, that's kind of the main thing. Again, the soft QE that we're talking about here, the $20 billion, will have an effect. So it will be positive for the crypto markets and for stocks and equities. But it's just not like the parabolic move that we had last time in 2020. So, any QE is good. But just so you guys know, it might not be a huge volatile move up. It might just be like a little bit more of a crab season, and it's going to take a little bit, further for or longer, for Bitcoin to get where it needs to be. So you guys again can download this Substack article that we put together, but we've said the base case, which is most likely, is going to be that liquidity is flat, QT ended, and TGA is not spent. So that's around an 85K to 105K Bitcoin now through to early Q1 of 2026. What we would need to see for a bull slingshot would need the Treasury General account to start spending. We need to see more liquidity released, and we need a short squeeze and gamma hedging. So we talk about all of this in this article, and that would be Q2 of 2026. So we would look at that. If we had a full bull market back on 140 to 200K, that would mean we would need the Fed to begin serious QE. Which is looking less likely now. So that's something that we want to bring to your attention, and that's the reason why I think Bitcoin probably won't go above 100,000 for a little bit. But the good news is that as we're settling on these prices, this is a good area to keep an eye on. And this is where we're probably going to be ranging for quite some time. This is the fear and panic zone between $94,000 and 77. So we're probably going to be ranging around here for quite some time. We may pop up and get into our de-risk zone, which is 94 to 103. And this is where a lot of people who believe in the 4-year cycle will look at de-risking. So this is the de-risk zone when it comes back up to retest the 50-week moving average, which typically is the sign of the start of the bear market. As you can see here, we broke the 50-week, crabbed season for multiple weeks, probably 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, and then tested the 50-week, and then we went into the bear market. Knowing that also, just so you guys know, it is different because QT, quantitative tightening, was actually announced around this area, and that's why Bitcoin ended up going into a 2-year bear market, because again, Bitcoin's intrinsically linked with liquidity, and when you're going into QT, you're taking money out of the economy. The difference here is that we're actually going to start to add liquidity into the economy, which is why the 4-year cycle doesn't make too much sense anymore. But those that do believe in the 4-year cycle will likely de-risk in this zone. So this is something to look at. So we may come up to this area before then coming back into the fear and panic zone, building some form of a bottom support here. And then if we get that QE in Q1, then we would move into, potentially new highs. But, it is a higher risk that we don't, due to the macroeconomy where it is today. That could always change. Everything can change very quickly in crypto, in the macro. Like I said, we've got the Bank of Japan interest rate decision on the 18th of December. That's going to give us perspective of where we stand in the global economy. So yeah, that's it for today's video. Hopefully you guys enjoyed. If you want more education like this, and you want a mentor who can kind of help you through the process of understanding the crypto markets, not just on the technical side, reading charts, understanding the macro, what the global economy is doing, how Bitcoin and crypto is intrinsically linked with everything. It's not just focusing on what crypto is doing, but you need to understand where everything else stands. Then you guys should definitely check out Crush Circle. This is my education platform that I have built over the last couple of years. It is, my pride and joy. We help, hundreds of clients navigate the crypto markets, especially during these uncertain times of, how things are changing and how, institutions are moving in and are making a huge difference in this market and are changing everything in terms of, it's gone from a retail-driven market to a institutional-driven market. You need to understand traditional finance to understand how institutions move. You need to understand the cost basis for institutions, all of this kind of stuff. So this is the platform. This is what we go through every single day when it comes to macro, fundamental, technical, and you have me as your mentor to help you through. So there will be a link in the description down below to apply. We only let certain clientele in. There's a particular type of person that we're looking for. So if you apply, fill out the form down below. And if you qualify, then you will jump on a call with my co-founder and my team. And yeah, hopefully, guys, I'll see you in the platform and I can help you navigate the crypto market. So yeah, thanks so much, guys. Appreciate you all. And we'll catch you in the next Coffee and Charts video.